Hey scrappers, if you're looking to figure out what materials you should sell this week or hold this week, now is the time to do it. Our weekly report is going to give you that information, up-to-date market news, pricing. Let's get right into it and we'll talk about it inside. Scrappers, welcome to 2024. Today is January 3rd, 2024. We welcome you to the new year. I hope they had a very Merry Christmas, Happy New Year, Happy Holiday season. I hope you enjoyed some of those recap and market preview videos. We saw lots of good feedback on there and comments. So we're going to build off of that going into 2024. We're going to continue to talk about the scrap markets, talk about people reporting prices. So if you still want to see any of the things that happened in 2023 and kind of the market previews, check out the 2024 scrap metal previews that we put out there. We put a few videos out there from aluminum to brass to copper to steel, catalytic converters. So check those out right online on our YouTube channel. So go from there. So let's jump into a couple of things. Copper prices were funny last week. That off week of trading, we actually saw them jump close to $4 per pound on a trading level. And I was reviewing some of the numbers last year, and I don't know how well this is gonna kind of stand up on an angle here. The high peak of copper last year was 474, right? That's not going to show very well.
I could.
The low,
There you go.
the low was $3.28. So this was a 2023 kind of copper map, right? So you saw it really bottoming out in August, and then things kind of climbed from there. Excuse me, let's go like this. This is I had the wrong number. Excuse me. 425 was the high that we talked about. I asked this for a 2-year map, and the low that we saw last year was right around 360. So 360 and 425. So going into 2024, we have a market that's trading right around 390, 385, which is a really solid level. And I talk about that because the electric vehicles that we've talked about over the last few years and the amount of copper they need, it's slowing down. But what concerns me is more of the industrial and commercial growth that's slowing down. I know residences and apartment buildings are continuing to pop up, but the amount of copper that we need, it's not going to slow down and drop 30% year over year, right? But it could have an increase of only 2 to 3%. It's going to be interesting because 2024 is an election year. Now, I generally never talk about politics on here, but when you have election years, you have weird things that happen to the market. Let's take COVID out, right? 2020 and throw that out because commodities were all over the place. Everything was. But generally, you have stability when it comes to election cycles. And that's normally because the incumbent, whoever's in office, the policies that they're looking to put out there, they're not looking to cause big ripples and big waves. That decreases some of the chances of them winning again come November. So I don't really expect to see large price increases or decreases throughout the year. I think it's going to be based on a lot of market news. I think it's going to be based on a lot of industry demand. We look at the electrical vehicles, for instance. We referenced an article this week talking about lithium. Right? Now, lithium is the metal that's desired to make batteries in all of these electric cars, iPhones, smartphones, anything that you can charge. Now, different manufacturers have been playing with nickel, with iron, with cobalt, and different blends of those, as well as using the traditional lead. But now they're trying to get more into the lithium because it holds the charge longer. It has a longer battery life opposed to some of those other ones. But some of the issues that they're finding, they cannot recycle them. So while there's massive amounts of money being pumped in from the United States government to figure out how to recycle these different batteries, we're starting to see a little bit of a slowdown when it comes to EV sales, when it comes to EV market demand here in the United States. In China, we've seen some market news. I think last night that I don't even remember the name of the company, but they sold more electric cars than Tesla did last quarter in China. So you're going to start to see more electric cars going onto the market, and you're going to see more demand for electricity. But the renewable sector, the impact it's going to have on copper really is going to be based on consumer demands. more electric vehicles, more hybrids, then you're going to start to see copper prices go up. If you start to see interest rates decreasing this year, I expect commodity prices to increase. Now, when I look at other metals like gold, right? Here, I got gold here. Can we take that off real quick? So when I look at gold for 2023, I saw gold starting the year right around $1,750. Now we ended the year over $2,000 an ounce, near, if not at all-time record highs. Why is that important? People generally put money in gold when they are unsure about different environments, whether it's financial environments, stock market environments. Now, if gold prices, because you're not really recycling gold every day, I know we talk about electronics and stuff. If gold prices start to decrease as the US interest rate decreases, and you start to see people putting more money back into the markets, we might have another strong year. 2023, as much as people want to complain about scrap prices for steel, aluminum, catalytic converters, overall, if you take out the blip of 2022 and in the second half of 21, it was a very solid year. 2023 was. And I think that that's what we're going to be building on, going forward. 2021, 22, 23, right? Those were recovery years from COVID. So now we should be back into hopefully a more normal cycle. And we're just going to see how these markets react in the coming months. I look at a bunch of other stuff and how they affect prices. Oil, for instance, right? Everyone has seen prices going down from the gas pump. Now they're still much higher than they were 4 years ago or 3 years ago, right? When they were $2 a gallon, but I paid $2.85 the other day. That's a far cry from the $5 that I paid in June of 22. So that's a positive sign. Oil prices decreasing, right? Let's say 50%, but it's a little less than that. It's probably 40% from the high that we saw in the onset of the Ukrainian invasion, which is almost 2 years ago, which is crazy. Those prices have come down. We've seen more domestic production of oil in this country, keeping prices down because people were getting upset on how high these costs were. And when people weren't converting to electric vehicles, that's when the strategic reserves were released. That's when we started to see more domestic production in the United States, where you just can't flip a switch and go from, all gas to all electric. It doesn't work like that. It's more of a dimmer. You got to slowly dim those things down, and oil prices being dimmed down, pulled down, helps transportation costs. Helps transportation costs for you driving to the scrapyard, for the scrapyard driving to the mill, for different export markets shipping things overseas, for the mills to be able to refine, scrap back into raw materials, whether it's copper, aluminum, or steel. In this country, those costs have gone down. So those are good things going into 2024, because lower fuel costs generally means lower costs on goods, because the fuel that is such a driver to all of these things. And that's going to help the economy kind of get through this year. But metal prices and metal demand, we're not sure where that's going to be. But when you talk about certain commodities and certain metals, you can really hone in on things. And let's talk about catalytic converters, right? Catalytic converters are going to slowly become extinct. Now, is it ever going to be completely gone? No, I mean, not for a few hundred years, unless we completely eliminate fossil fuels, which won't happen for a long time, considering many third world countries don't have running water, let alone a port to charge an electric car. So the demand for catalytic converters and the precious metals that go into them, platinum, palladium, and rhodium, that's a very uncertain future going into this year. Why? Well, if more auto manufacturers are producing hybrids or EVs, they don't need catalytic converters. Now, if more auto manufacturers push heavier towards hybrids and gas engines, and they pack more precious metals into the catalytic converters, that could increase the market demand. But as we spoke about in our market recaps and previews, they're metals like rhodium that really aren't used in any other industry. So while they can be used for carbon capturing, whether it's from cars or power plants, the demand for many of these metals stop once you leave the energy sector. Platinum is one of the ones that it goes into jewelry. It could be used in some electronics, but generally that's more of a gold thing, right? Palladium, no one ever comes to you and says, "Oh, look at my palladium wedding ring," right? Or look at my rhodium necklace. That doesn't happen. You don't see those metals being used in the jewelry industry. And that's where a lot of precious metals are really being honed in and used for. So we're not seeing large growth there. So it's going to be interesting to see how things pan themselves out and work themselves out. Aluminum prices steady month over month. Nickel prices, nickel, I got to show you this. Nickel prices are so crazy. In the beginning of 2023, we had nickel prices, to show you here, right here, was at 31,000 per ton. We ended 2023 at 16,500 per ton. So we went from 30 to 16. That's a decrease of 45%. And when we pull up some of the reported prices for these different stainlesses, we'll show you in just a second, you'll see how that's reflected. When we click on 304 stainless and we continue to see that price average at 33 cents, that's not really a surprise. There's not a lot of prices that are out there. Look, this is from August through December. 37, 34, 35. You're not going to see much more consistency than that. So while we've seen a few cents getting added on, it's not enough to move the needle that is really going to affect things unless we start to see the electric vehicle industry integrating nickel a little more. Now, we talked about copper, and I'd like to show some of the reported prices that you have put up there. We'll pull up Bear Bright. And just such a bellwether for copper prices. Last week, we didn't see many things really going out there. But if you look here, 30-day price average, 309, up 6.5%. Some of the prices, 320, 339, 350, 330. So you see really solid prices in the last few days. And that's going to be a good thing because those prices are going to continue to be solid going into January. We're probably going to see a few cents being pulled off the markets because a lot of those prices are going to come down because we saw a bit of a dip and the market demand hasn't fully kicked itself in. But we're watching these prices really closely, and copper demand is there. January is generally a month where people are getting over the holiday hangover of November and December, getting into new budgets, into new projects, pushing forward into the first quarter so the other 11 months can really be stable. So January is very much a let's get our feet under us month. And from there, we start to see where the metal prices are going. But when we talk about steel prices, we'll pull up some of the ferrous prices right now. Those have been one of the biggest beneficiaries of oil markets dipping themselves down. When we see some of the oil prices dipping down to the level they are, we see a direct correlation with steel prices increasing, thus all of the green on the board right now. So let's scroll down to light iron, and when we click on light iron, a very good bellwether at $153 a ton. Look at some of the reported prices in the last few days. 175, 180, 180, 7 cents equates to about 150, 170 a ton. So we're looking at numbers that have a 30-day price swing upwards of 12%. And that's a really good thing because that's about $15 per ton. And that doesn't include what we saw in November, which was another $15 per ton. Yesterday, I was looking at my steel prices for the last couple of months, and I saw a $35 per ton increase from November 13th through today, January 3rd. So we're seeing the oil decreased rates affecting scrap positively, which is really great to see. And we're happy to be able to really push those prices up, especially at the scrap yards. Many of these scrap yards were losing customers because people stopped doing a lot of scrapping. Maybe not a demolition contractor, but a lot of the day-to-days, they stopped touching steel and only stayed on copper and brass because that's where money was. So those are things that we look for on how they affect the markets, what we look at, and kind of go from there. But, listen, 2023, solid year. Steel prices, I know, may not have been the best. Okay, listen, you're not going to have a good year for every metal, but copper prices really remained very consistent. In the last 6 months of the year, we saw a strong and consistent market for copper. That's awesome. That's exactly what we want to see happen. So we're seeing that happening, and that's going to push into 2024, paired up with the presidential elections, local elections, commodity swings, oil prices, and worldwide conflicts hopefully being abated, those are all the things that will really contribute to the markets. One note that we did have, people loved some of the videos that we've had talking about scrapping vehicles. We're going to put a blog together in another video talking about the types of vehicles that are and are not worth scrapping. We've had people ask us about campers, tractor trailers, 53-foot trailers, tow trucks, and we're going to go over some different types of vehicles that you may be able to scrap. And there are certain ones that you can pay, pay for because the return is so positive. Like, I don't know, a fire engine is a great one if you ever see it on an auction. But then there's other ones like campers that you need to charge to get rid of because of the amount of garbage. So we're going to go into different types of vehicles, what is and is not worth scrapping those vehicles. This way, as you build your business, have opportunities come to you, we touch on those things a little more. But continue to check out some of the videos that we have on our YouTube page, from our auto series to what is and what is not worth scrapping. YouTube has new videos that pop out every week that we put together, so please check those out and let us know what else you want us to talk about. Scrappers, my name is Tom. Today is Wednesday, January 3rd, 2024. We welcome you to the new year. We thank you for continuing to report your prices. If you're looking for any new gear to buy, you can always check us out online, where we have magnets, t-shirts, and other things available for sale. You go right to shop.iscrapapp.com. Gets shipped right to you very quickly. I know the holidays are over, but that doesn't mean you're still not welcome to treat yourself. So, scrappers, my name is Tom, and until next week, I'll scrap you later.
Thanks for watching our video. For $2.99 a month, by becoming a member, you can get access to early videos, member-only videos, merchandise discounts from our store, and priority comments that we answer before answering any other scrappers. Click the link below to learn more. Until next time, scrap you later.